Welcome back to your favorite podcast, Next in CCM, where we break down how modern CCM solutions are shaping industries one innovation at a time. I'm your host, Tanmay Guha Roy. We are overwhelmed with the love you have shown in the past few episodes. Thanks a bunch, all of you. Keep supporting us, and we promise to bring you interesting ideas, people, and perspectives in each episode. If you want to hear about a particular topic or want to join the podcast as a guest, do let us know. We'll be more than happy to explore. Today, we'll talk about a topic that is often overlooked, but absolutely critical for financial institutions. That is high volume SMS operations. Specifically, we want to discuss how most financial institutions today handle transactional messaging and how it can be transformed. Once again, I'm joined by Sahil Riaz in this episode. Some of you might have already heard him in the previous episode where he talked about MT940 and MT942 capabilities of a modern CCM solution. For those who haven't, Sahil is a software engineer by education. He leads product management at FCI CCM. Let's welcome Sahil.
Thank you, Tanmay. I'm totally overjoyed to join you once again and the listeners of the Next in CCM podcast.
So are we, Sahil. I'll start by asking you a basic question. Why is SMS operations so crucial in the financial services industry?
You may say SMS is kind of the backbone of customer communication in financial services, whether it's sending balance updates, payment reminders, sending policy renewal reminders, transaction alerts, or sending one time passwords or OTPs. Financial institutions, especially banks, send millions of messages daily that ensures that customers stay updated about their accounts, insurance policies, and financial transactions.
And it's not just about keeping customers informed, right? SMS is also about building trust. Imagine waiting for an OTP that doesn't arrive when you're trying to log in or make a payment. It's not just frustrating, it's also damaging to the bank's reputation.
Exactly, Tanmay. Customers expect these messages to be instantaneous and reliable. You know what? High volume SMS operations are much more complex than they appear. It's not just about sending messages, it's about managing speed, efficiency, delivery, accuracy, and costs. Let's go back to the example you just mentioned. A delayed OTP or a failed transaction alert can lead to lost trust, missed business opportunities, and in some cases, regulatory scrutiny.
And yet, many financial institutions treat SMS operations as routine work. They often use outdated legacy systems. They don't have a centralized communications hub. They are a mesh of different applications to run different jobs. Naturally, they don't deliver the reliability, the speed, or the cost efficiency required in today's fast paced environment.
I completely agree with you, Tanmay.
So, Sahil, let's talk about the elephant in the room legacy CCM solutions. More specifically, managing high volume SMS operations through legacy CCM solutions. What's the challenge with them?
Well, they have several limitations. First, they're inefficient when it comes to message routing. This inefficiency directly increases operational costs. Second, they often have lower delivery success rates, means critical communications like OTPs or transaction alerts may not reach customers on time or at all.
You mean that their reports will show that the SMS has been delivered, but actually it hasn't been, right?
That's exactly what I'm saying.
And another issue is downtime, right?
Yeah. System failures can mean delayed or undelivered messages, which isn't just inconvenient, but can also lead to security risks.
I see. And poor customer experience is the ultimate consequence. Late OTPs or failed notifications can erode trust and lead customers to switch to competitors. Isn't it like a vicious cycle?
Yeah, it is. And on top of that, these legacy systems lack advanced tools for compliance and auditing. As a result, financial institutions often need to involve multiple teams and rely on different systems for delivery reports to reconcile and track costs. Plus, that exposes them to compliance risk.
I see. This inefficiency wastes time and resources. Can you please give us an example?
Until recently, one of India's largest private sector banks faced this exact challenge. They were not being able to understand the credit usage, like why some messages consume two credits instead of one, or whether they were paying for submitted messages or delivered messages. They were spending over 100 hours every month, manually reconciling fragmented SMS data.
Oh, I can fairly imagine how these uncertainties can add up quickly. We are marketers and we always want to measure everything. I can't resist the temptation to make an attempt. Say a bank sends 100 million SMSs for account balance updates daily. If just 2% of their recipient list is invalid numbers and they don't suppress sending messages to them, how much money is being wasted?
Well, 2% of 100 million is 2 million failed SMS. Say each SMS costs 12 paisa or about 39 cents. That's rupees 2.4 lakhs or roughly $2,900 wasted every single day.
So, this is the indirect cost of inefficiency. Over the course of a year, that adds up to 9 crore rupees or $1 million. $1 million down the drain every year. That's staggering.
And Tanmay, this is just the direct cost of failed messages. It doesn't account for the intangible costs like lost customer trust or time wasted.
Totally, Sahil. This is how it hits the bottom line. And yet, many institutions continue to rely on these outdated systems.
It's a classic case of it's always been done this way. But the reality is that sticking with legacy systems is costing them far more than they realize.
Well, I get all this. But Sahil, tell me, how does a modern CCM solution solve these challenges? What makes it a game changer?
You know what? They are purpose built to handle such complexities which legacy solutions are not. High volume SMS operation is just one of them. There are many.
Yeah, that's right. We'll have another episode on that. Today, we'll stick to SMS operations.
Right. As I was telling you, they are built to manage scale. Like, let's take the example of our own CCM solution, VARTA. It can process up to 250 million messages per day, thanks to its microservices architecture and Kafka-based queuing system. This ensures that even during peak demand, messages are delivered reliably and on time. Varta's multi-gateway configurations and automatic failover mechanism mean that messages are always routed through the most efficient and cost-effective pathways. No downtime, no delays.
That's great. But is it only about volume?
No, there are more. Like Varta also offers real-time cost calculators and analytics dashboards.
Well, what does that do?
It gives banks complete visibility into their messaging operations. That means business users can track delivery success rates, monitor gateway performance, and identify areas for cost optimization, all in real time.
Do you mean there's no dependence on the IT department or multiple application vendors to pull out such data?
That's correct, Tanmay.
So it's not just a messaging tool, it's a strategic asset for improving efficiency, reducing costs, and enhancing the customer experience.
Yeah.
Well, Sahil, you mentioned earlier that a private sector bank adopted VARTA. What kind of impact did it have?
Yeah, it was one of India's largest private sector banks. They replaced the legacy applications with Varta and saw a 30% reduction in messaging costs,
That's an eye opener. How is that possible?
thanks to optimized routing and gateway management.
Ah, I see.
And you know what? They also achieved a 25% reduction in message failovers, meaning more messages were delivered on time.
Great. Did they also measure if there was any lift in the customer satisfaction scores?
I can't recall the exact numbers right now, but that did improve significantly because the on time delivery rates hit 95% for OTPs and transaction alerts.
That's the kind of impact that goes beyond numbers. It strengthens customer trust and positions the bank as a reliable partner in their financial journey.
Absolutely. And it's not just about cost savings or operational efficiency.
Yeah, it's about enabling growth. Well, Sahil, we talked so much about VARTA, and I'm sure our listeners will be curious to hear this. Where does VARTA stand out from other modern CCM solutions available in the market?
Look, VARTA is built for performance, security, and scale. Its microservices framework ensures modularity and flexibility that makes it easy to scale up as messaging volumes grow. Kafka based queuing ensures reliability, even during high demand periods.
Wait, you know what? This question keeps coming back. What about information security?
VARTA is fully compliant with regulations like GDPR and PCI DSS that ensures data security. And for business users, the real time dashboards and advanced analytics is the real game changer.
Which provides actionable insights that help banks make data driven decisions. They can optimize costs and improve delivery performance.
Yeah, and faster. More reliable SMS deliveries mean happier customers. So it's a win-win for everyone involved.
All right, Sahil, we've covered a lot of ground today. From the critical role of SMS in financial services to the limitations of legacy systems, the staggering costs of inefficiency, and the transformative impact of VARTA. Any final thoughts for our listeners?
If you're a financial institution still relying on legacy systems for SMS operations, it's time to rethink. Embrace a modern CCM engine. It's a strategic partner that can drive efficiency, cost savings, and customer trust.
Well said, Sahil. Thank you all once again for tuning in to the Next in CCM podcast. Watch out for the next episode. And don't forget to like, share, and subscribe for more insights on how innovations in CCM technology are reshaping the industries. Until next time.
This podcast is brought to you by FCI CCM, a premier provider of omni-channel, hyper-personalized customer communications management solutions across industries.